Hey guys, good afternoon. It's Vinod here from GrowWealth. Hope you're all well. Today is the Saturday, 5th of November 2022, and this is your GrowWealth's weekly stock market update. Today, as a bonus, I also have a particular stock that I'm quite interested in that is, I believe, is breaking out of stage one consolidation into potentially the stage two uptrend. Let me take you through a brief presentation that I've created for you, analyzing various stock market indices, the US indices, and also some of the learning objectives, learning points that will be helpful in empowering you to invest better for future. If you have any further comments and interest about what I'm talking about, feel free to email me or contact me on this YouTube channel through the comments below. Feel free to like, subscribe, and press the notification so you get notified every time I post this weekly stock market analysis video. Without further ado, let me go through the presentation that I created for you. So if you are in the stock market, particularly the US market, you would have noticed quite a lot of volatility. Market is up one day, big, down one day, big, depending on what the Fed is doing and the whims and wishes of the major index, the fund and the Wall Street investors. So how do you trade within this volatility? You may also know that the market is in downtrend. It is in a bear market, and people are wondering, is the bottom in yet? Did we reach a bottom? How do you get any level of visibility amidst this volatility? So that is going to be the focus here. And I've created a simple to understand, very clean chart with two indicators that will guide you in this process. So where is the market heading, and have we got a bottom yet? So we look for clues and we look for confirmation. We don't have a confirmation without the clues, and we can't be certain without the confirmation. So what are the clues I'm going to use? So I'm going to use the clues of a moving average and another indicator that will tell us whether we might be up for a reversal in the market. Let me tell you a little bit about myself. My name is Vinod. I am a physician. I work in UK as a psychiatrist and mental health physician. And I'm also equally passionate about investing. And I created this channel and also the blog Grow Wealth with an aim to empower others by sharing my knowledge and my learning with you all to empower you to invest better. You can contact me on those addresses or also in the chat below. And let me make the disclaimer quite clear. This channel and all the information that I share with you is purely for educational purposes only. I'm not a financial analyst. I'm not qualified in any way to give you advice in terms of investments. What I'm sharing with you is purely my individual opinions and ideas and comments. It is not a buy or sell or hold recommendation. As you know, investing or trading anything, not just stocks, carries a level of risk. You may get more than what you invest. So you have to have your own kind of plans, and you have to make your own decision whether to invest in something or not because of the risks involved. If you want more advice on your individual personal situation, you need to contact independent financial planner or analyst or your broker. I hope that is clear. So use this channel for all the educational purposes. And I hope the information that I'm going to share with you in this video and subsequent weekly videos is of use to you. So let's start with a broader view. Let's zoom out. There's a lot of volatility, lots of noise on a daily basis. If you look at the news channel, you're destined to be confused at the end of it, or worse, scared of what to do and what not to do, right? So when in doubt, zoom out. So this is a S&P 500 monthly chart, and the red line is the 50-month exponential moving average. As you can see, over the last 10 years, the S&P 500 has bounced off the 50 exponential moving averages for 5 times. And right now, we are sitting just above that 50-month moving average. So this has acted as a support in the previous bull run over the last 10 years. Will this act as the support? It could. Or if it breaks down below that, then that signifies a significant downtrend compared to the bull market that we have had so far. But right now we are above that. So this has proven to be a support so far, and until it breaks down, it should be considered as a support. Let's look at what has happened in the previous uptrend and the bear market that we had. So I've seen various informative videos and read a lot of books, and this comes from what I've learned. So in the 2000 bear market, following the dot-com boom, we had the market going up and up and gave a new higher high. Whereas if you look at the relative strength index, the RSI, it has given a lower high, and thereby giving us a negative divergence. When we have higher highs, there is lower highs on the RSI, and it goes in the opposite direction. So there is a divergence. And in this case, it's negative because the price action of the index or the underlying stock tends to follow the RSI. So RSI leads the price action. So this is downward facing, and the market came down. Whereas close to the bottom, when the stock market gave a new lower low, the RSI gave a higher low, and then another higher low when it kind of retested that low here. So when the market was going down, we have a positive divergence. So following a positive divergence, we had a new bull market after 2003. Let's look at the 2007 and 8 great financial crisis. We had a higher high, we had a negative divergence, followed by a bear market. And when the bottom broke below and gave us a lower low in the RSI, we have a positive divergence, which then followed by a new bull market in 2009. So where are we now in 2022? We have a higher high for where the RSI gave us a negative divergence. So this could have given you a good indication that we are topping out and that a bear market would be coming soon. And we did have a bear market, and we are in one now. So we had a lower low here back in September, October, whereas RSI is giving us a positive divergence. Will it lead to another leg down, and the positive divergence might still be positive divergence, or have we set a bottom here and likely to resume a new bull market? We don't know that yet. Yes, there is a positive divergence. In two previous bear markets, that was followed by a new bull market. But that doesn't automatically mean that a new bull market is coming immediately. We need a confirmation. So what we have seen so far is one of the clues, the divergence, the RSI divergence. And in order to get a confirmation, we need something else on top of this. And that's where I introduced the 200-day simple moving average, the purple squiggly line on the screen. So let's look at what has happened in the previous bear market with respect to this 200-day moving average. We had the market top here in 2000. We had the market bottom here at the end of 2002. But then the new bull market couldn't start, or we can't consider that it's a bull market unless the price is above the 200-day moving average, which happened in the first half of the 2003. So when the price broke above the 200-day moving average and stayed above that, that is when you can consider that as a reversal and a new bull market starting. You can see here it did go up above the 200-day moving average for a very short period of time and then resumed the further downside movement. So we need the 200-day moving average to be captured, break on above, and then staying above that. So that is why this acts as a second clue to see if the market direction is changing. What happened in 2008 and 2009? So it stayed below 200 moving average for well over a year, and it gave a positive divergence as we saw previously, and it had a huge run here but then there is a resistance level there, which also coincided with the 200-day moving average. When it broke above the 200-day moving average, it tried to retest the 200-day moving average to try to break down below that, but it acted as a support in quite a few for quite a few weeks here. And when that has proven to be a support and the price action recovered and the moving average kind of inclined upwards, that is when the new bull market has officially started, in my view. So where are we now in 2022 bear market? The 200-day moving average is quite a way up here, and the S&P 500 is right here. So there's quite a lot of daylight in between the current price and the 200-day moving average. So this means that although we have a positive divergence in RSI, as long as the price has recovered the 200-day moving average and stayed above it, we can't consider this as a confirmed reversal yet. So we can't say that the bull market has started. We are still in the bear market until this gets broken out of. But that doesn't mean the market has not have a bottom yet, but we can't be certain about the bull market. So until we have that, we have to consider that any rallies are all bear market rallies. So caution advised. You don't want to kind of jump with 2 feet and go all in at this point, because as long as it's below 200-day moving average, it is not very good. People say there's nothing good happens below 200-day moving average, and that's what it means. Let's look at some of the other indices. So this one is the UK's FTSE 100. UKX is the ETF, and this has recovered. And just this last Friday, it closed just a little bit above the 200-day moving average. It's got quite a lot of dividend names, defensive names, and oil and gas sector names. So they are acting really strongly. So this is a little bit stronger index compared to its US counterpart. So in the screen, we have 3 other US index: NASDAQ 100 on the top, Russell 2000 on the left, and Dow Jones index. The message is similar. NASDAQ is one of the weakest at this point. There's a lot of daylight between the current price action and the 200-day moving average. So some time to go to still before we can consider that a bull market is in place. Whereas Russell 2000 is a little bit stronger. It came and almost retested the 200-day moving average, couldn't break above that. Dow Jones did break above the 200-day moving average, but since the Fed announcement of 0.75% interest rate hike a couple of days ago, it came below that. So Dow Jones index seems to be strongest of the all other US indices at this point. But nonetheless, it is sitting below this horizontal previous support, now turned resistance line. So the takeaway message now is the US indices are all in the downtrend. Dow Jones, Russell 2000 a little bit stronger than the NASDAQ 100 and S&P 500. These are the must-read trading and investing books. If you want to make it in this field, you have to educate yourself. Investing in yourself is the first step. Most of these books are available for cheaper prices, and you can go to the local libraries to get some books as well. Invest some time in going through that so that you can educate and support yourself in this. Of course, Grow Wealth videos like these ones can be informative and guide you in whichever way possible. But in terms of making you the money that you would want to make, you need a good trading plan, risk management strategies, and you need to address your psychology as well. And reading about these things as much as you can is the best way to go about. I haven't put in all the books that must be read, but these are some of the sample ones. Stan Weinstein book here is one of the seminal book, The Secrets for Profiting in Bull and Bear Market, talks about the stage analysis methods. And the bonus stock that I'm going to talk about is based on his method of stage analysis. And that is this one, Robinhood. So ever since it came to the public market with IPO here, it's been in a huge downtrend, and the bear market conditions hasn't helped it. However, over the last many months, it's kind of gone sideways, and set up a stage 1 consolidation, the orange line here is the 30-week moving average as per the stage analysis. It broke above the 30-week moving average, consolidated to the side, and now it broke out of that mini consolidation pivot point here last week. And it did so on higher volume. And the bottom panel here is the Mansfield relative strength. And it has also crossed the 0 point, that's the dotted black line, the dashed back line. And this wiggly black line that crossed above that 0 point indicates that the price action in this stock hood is showing relative strength. So we have the price above 30-week moving average, stage 1 breakout on higher volume, and Mansfield relative strength. What we need to see is it continue in the further uptrend into the stage 2 uptrend. According to stage analysis, the book that I mentioned earlier is a really good one for you to read, and they have good information on where to put the stop loss if you're a trader versus if you're an investor. So go through, read them, and see if this stock, if the fundamentals also fit your trading strategies. So this is just the technical analysis. You would also need to look at the fundamental analysis to have the odds in your favor. And of course, risk management is another important strategy to be considering. Of course, I can't cover all of that in one video. Hopefully, this gives you some pointers to go and do your due diligence and learn further. Hope this was helpful. So happy learning and successful investing. Hope this was useful. I see you in our next week's video. Bye-bye.